Good afternoon, everybody, to all the dignitaries and all the students of intermediate who have joined for this session, and to my BoS faculty, and very happy Teachers' Day to all of you. Today we have gathered and we are starting with these sessions. For final was there in the morning, and now in the afternoon, 2:30, we are having the session for the students of intermediate who are appearing in November exams. So we have started this particular session in continuation to our session of 1st September 2022, wherein our Honorable President, Vice President, our Chairman and our Vice Chairman all were there and had addressed all of you and had given you specific tips for the exams which are coming in November. And now in continuation to that, we are starting specific sessions for each subject by our BoS faculty. And today being the Teachers' Day, we are starting this program which is going to continue till 26th of September. Besides our Chairman CA Dayanivas Sharma, our Vice Chairman CA Vishal Doshi, our Honorable Central Council Member CA Prakash Sharma is also there, and he's going to address all of you and give you the special tips for the exam, November exam. I'll invite my Chairman Vice CA Dayanivas Sharma to kindly welcome the guest of the day. Over to you, sir.
Thank you very much, Vandana Madam. My dear students, and happy afternoon to everyone. At Board of Studies, we are really delighted that Board of Studies has come out with BoS For Your Success, keeping in mind the entire results of past examinations. And this particular time, we have thought that what are the gaps which are being noted while doing examination? When you write your examination, what gaps? You are thinking that you are writing it perfectly right, but where are those gaps? Step by step, subject by subject, we are going to take you through. What better day it can be than the Teachers' Day, where BoS can give you something, a value add 2 months in advance for your exam preparations. You already have started preparing for your examinations. Person who is writing afresh, they will also get to know what errors the students have done in past. The students who are writing their examination again, they will also understand where they have missed out, where was the gap of that perfection which was required to score that magic number of 200 in each group. Considering all these factors and assuming the gaps which are being noted, particularly when we talk about the intermediate results, which we have got last time for the May examination, have been little disturbing, not little, rather it is what was disturbing for us, that how come students are actually not able to understand the requirement of examination and how these gaps have actually impacted the core papers, whether it is accounting, whether it is auditing, whether it is income tax or any such paper where students could not do well, where these are the topics which you ultimately are going to develop your career to be there. Considering all these factors, we this time have ensured that the faculties from Board of Studies personally come and give you the inputs. These are the people who are designing your entire study material. These are the people who are designing your RTPs. These are the people who are actually developing all the suggested answers for you students. Please understand, this is something which we are directly getting the knowledge hub before you, and you have to use it more effectively. If you have any doubts, kindly put it on a piece of paper or might be write it in your comment box. What suggestions are there? What we will do from Board of Studies is we will pull out all those data and put it in a proper FAQ manner, and we will give you back. And once you complete this 2-day session, which is going to be starting from today, for accounting, we have divided the accounting in 2 parts, considering the weightage, subject-wise, topic-wise, and the critical aspect that need to be looked in by each one of you, step by step, where the gaps have been. Taking example of the previous examination question answers where the gaps have been noted by examiners, that all is going to be consolidated for your benefit so that your examination for November is a celebration rather than being botheration. We want all of you to really succeed in this entire process. That is our agenda. Considering that factor, one of the senior most council members, Prakash Sharmaji from Jaipur, has actually agreed to come and motivate you all people on the day one, because this is going to go till 26th of September, every day, leaving Saturday and Sunday. And hopefully Saturday and Sunday, we are going to get some motivating speakers from our council to come talk to you all people in a different thought process, which encourages you, motivates you, and gets you that confidence that you can do it well. Considering this, today we are having our senior council member Prakash Sharmaji, who is actually the chairman of CM Committee for Member in Practice and Committee for Banking and Insurance Sector. And he's been contributing a lot to the council from last 7 years. Having him as a initial first opening batsman for all you people matters a lot. Who better can be there who has seen 14 examination cycles in the institute, and he is going to give his words of wisdom today to you all people. Ask him. He has gone through the kind of difficulties when he has passed his CA, and there is more you can learn from his own life story, which we have got him today. So, sir, over to you. Look forward for your opening comments.
Thank you, Dayabai. First, I will like to place on records my sincere thanks to Dayabai, Chairman of BoS, and Vice Chairman Vishalji, and all ICI team for providing such a wonderful facility. Friends, when I was doing my CA, believe it, the biggest challenge for me was that from where to get the knowledge, from where to get the proper tuition. Friends, I am by default a CA. Till I completed my graduation, I was a badminton player. Then I shifted in CA profession, and I was financially very weak. I had completed my CA sitting in the institutes, Delhi institutes. In NXC, there was on 5th floor, there was a reading room which used to open in the morning at 6 o'clock and used to close at 10 o'clock in the night. So I have seated over there, and from there I have completed my CA. Friends, technical knowledge, so many people will be sharing with you. First, this is very, very important that we should get a proper teacher, proper person who may guide us in a right way. So I'm very sure and very confident that our chairman and vice chairman, they have selected one of the best faculties, and I'm very sure that you will be benefited by that. My only thing to you, my only request to you is that I see lots of intelligent people who doesn't complete the CA and they leave it in between. Believe it, friends, if a person like me, who when I completed my graduation, I was not even knowing that what were my subjects in the graduation, because I used to play from the college, and college people used to get me a pass by all the way. So I was not even knowing that what were the subjects with me in the graduation. But when I joined my CA, friends, the only motivating thing was, I believe in one thing, that if there is a way, if there is a will, there is a way. When I used to go to play badminton in one of my hall, so in that hall, there was a quotation. This quotation was written over there. If there is a will, there is a way. And I strongly believe that if we have got confidence in ourselves, I don't think anybody can stop us. I'm very confident. Friends, you know, one of the IPS officer in Bihar, he takes 30 students for this thing, IAS and IBS. And he teaches them like anything. He involves himself. Still, the result is 90%, not the 100%. I was listening his speech. He said, why my result is 90%? But 10% students who fail in that exam are those students who lose their confidence. So my only request to you is, please have 100% confidence in ourselves and believe it. This is very, very simple course and very useful course for the society, for us who can very comfortably take this nation in far better position. Just yesterday only we were reading that India has come in one of the 5th position in all over the world from business point of view. We have taken over England, and I'm very sure the way we are moving, in which our CA Chartered Accountant is playing a big role in the society. I'm very confident that we all will be in a position to bring this country in one of the first position. So my best wishes to all of you, and I'm very sure that result will be improving day by day, and we all are available to you for any kind of help or guidance. We are always available. So best of luck to you. Thank you. Thank you, Deabai.
Thank you very much, Prakash Bhai. I think a life story of yours will give that motivation to students. Failures are just stepping stone to success, and understanding is something which comes over a period of time, and we move on. Over to you, madam.
Thank you, sir. To our Vice Chairman, sir. Sir, would you like to add to certain more things from your side for the students, sir?
Thank you, madam. A very good afternoon to all my student friends. I wish you a happy Teachers' Day, and similar greetings to all my seniors, the council colleagues present here. Dayabai, Chairman, Prakash Bhai, a very senior council colleague and a friend, philosopher and guide, the faculty members of the Board of Studies, Vandana Madam. I would at this moment on this day just would like to first extend my greetings to all the students and would tell them that you are appearing for the exam, and what I would say is that please remain focused with respect to exam. The CA exams are difficult but not impossible. We already have 3.5 lakh plus chartered accountants who have passed these exams, and the whole purpose, the whole objective of having this series of lectures from the faculties of the Board of Studies is that the students would get a very different insight from the faculties, from the people who are designing your study material, the background, the concept, and the clarifications that they would be able to give. You would not find from anywhere, like we normally say, hearing from the horse's mouth. It's that the people who are there behind the whole curriculum and your study material, they are the ones who are here to train you, to impart knowledge to you. And please make maximum use of these efforts of the Board of Studies, and these lectures would be followed up with the mock exams, the 2 series. So please do not miss out on them. These are opportunities that from the Board of Studies we are giving to you to prepare you for the examination, and please make maximum use of it. Thank you and wish you all the best. And special thanks to Prakash Bhai for joining us and motivating the students. Thank you, sir.
Thank you, sir. Thank you. Thank you, sir, for your piece of advice to the students. I hope all the students would have gained from the experience and the words of wisdom shared by our Honorable Chairman, our Honorable Vice Chairman, and our Chief Guest, CA Prakash Sharma ji. I thank you, all of you, for being with us and with the students and motivating them. Now we'll continue with our session with our BoS faculty. I welcome CA Seema Gupta and CA Asha Verma, who are going to take you through with paper 1 accounting. So students, we are going to start the session, and they are going to take you through the entire syllabus, how you need to study, what are the latest amendments which are applicable for November exam, and they will take you through the subjects, the particular specific questions from each topic where you are tending to err, how you really have to cope up with a particular paper, the steps you need to take care, and while attempting the question, what all you need to take care and keep in mind. Because Students, it's very important that you go through the subject very clearly. You should have that conceptual clarity of the paper and the topics. You should be clear about the topics also, right? With some lack of clarity, you may read the question not in the right perspective and attempt the question which do not fetch you the marks which you actually want, which you deserve. So students, our BoS faculty are there for you. They're going to continue with you for 2 days. They'll take you through the entire paper. You can pose your queries in between and they'll tell you how really to attempt a question and how to manage the 3 hours time for attempting the questions which are given in the question paper. Okay, so students, what I'm going to do is I'm going to start with the skill-wise and section-wise weightage of marks for this paper 1, accounting. So students, I must tell you, you must keep in mind the section-wise weightage for each topic so that you can plan your study accordingly. You can plan the sections which are having more weightage, you need to give more time, right? So students, have that thing in mind. Plus also keep into account the comprehension and knowledge. The skill-wise weightage also you should be aware. This particular paper is having 5 to 15% of skill, that is level 1 comprehension and knowledge. So students, skill-wise weightage for level 1 is comprehension and knowledge, and it is having a weightage of 5 to 15%. Then comes level 2, that is analysis and application, which is having the weightage of 85% to 95%. So students, application and analysis skills is having a weightage of 85% to 95%, because while you will be attempting, you are going to apply your knowledge, what you have learned, right? And you need to analyze various issues which are there in the topics. Now students, I come to the section-wise weightage for different topics. Students, the topics: process of formulation of accounting standards, including Ind AS and IFRS, convergence versus adoption, objective and concepts of carve-outs. This is topic 1. Topic 2 is framework for preparation and presentation of financial statements as per accounting standards. And third is application of accounting standards. So these 3 topics is having a section-wise weightage of 20 to 25%. So students, kindly note down, these 3 topics are having the section-wise weightage of 20 to 25%. So plan it out accordingly. Then I come to the next topic, which is relating to accounting for special transactions. This is covering investment, insurance claim for loss of stock and loss of profit, hire purchase and installment, sale transactions. These 3 topics under the head accounting for special transactions is having weightage of 20 to 25%. Then I come to the next topic, which is the special type of accounting. This topic is having departmental accounting, accounting for branches including foreign branches. Then the third one is accounts from incomplete records. So students, these 3 particular topics is having a percentage of 20 to 25%. Then I come to the last topic, which is relating to company accounts. It covers preparation of financial statement, statement of profit and loss, balance sheet, and cash flow statements. Next is managerial remuneration. Then is profit or loss prior to incorporation, accounting for bonus issue and right issue, redemption of debentures. All these topics are having weightage of 30 to 35%. So the topics from company accounts is having a weightage of 30 to 35%. So students, kindly keep note of these section-wise weightage and skill-wise weightage in our and visit the BoS knowledge portal frequently There you will get all this information very readily. We have changed the page. We have rather remodeled our BoS knowledge portal, which gives you all the information at one go itself. You don't have to click on the buttons and then go inside. And on one page itself, you get all the information. So students, these sessions are really going to be helpful for you. Our BoS own faculty, CA Seema Gupta and CA Asha Verma are going to take these sessions for you and will tell you about the nitty-gritty of this subject. Attend these classes regularly. Spare this much time. It will help you in attempting the paper in a very smooth manner. You can have your planning accordingly. Pass on this message to your friends, to your peers, so that they should also come and make use of this BoS knowledge which is imparted by our own BoS knowledge, we own BoS faculty. So now I welcome our faculty for the day, CA Asha Verma and CA Seema Gupta. Welcome. Welcome to both of you, and over to you.
Thank you, ma'am. Thank you, ma'am, for giving us the opportunity. Thanks, ma'am, for giving us the opportunity to interact with the students. In today's session, it's a very first session in our BoS for Success series. And in today's session, we will be discussing about the structure of the question paper, skill-wise and section-wise weightage of the syllabus has already been discussed by Vandana ma'am, our Director of Studies, and she has explained the structure of the curriculum, how the curriculum has been bifurcated into 4 sections. In section 1, where we are covering the portion of accounting standards, and in section 2, where we are covering the portion of accounting for special transactions. And in section 3, we are covering the special type of accounting like branch and departmental. And section 4, which is very important, is the company accounts portion. The maximum weightage, which has been discussed also, the maximum weightage is given to the company accounts portion, which is approximately 30 to 35% of the weightage. So the marks from which the questions can be asked from this particular portion is around 35 to 45 marks, and this is but sure that one complete question on company accounts will be asked in the question paper, which will be based on preparation of financial statements of the companies. So continuing with the same discussion, let us first begin with the structure of the question paper. As you know, the question paper the question paper of intermediate paper 1 accounting consists of 6 questions in total. Question number 1 is a mandatory question on accounting standards. The weightage is 20 to 25%, means this first compulsory question, besides this compulsory question of 20 marks, we will have another question. In question number 6, there may be around 2 parts of 5 marks each from this particular section on accounting standards. As far as the syllabus of paper 1 accounting is concerned, we have 8 accounting standards which are covered in the curriculum of paper 1. AS1, AS2, AS3, AS10, AS11, AS12, AS13, and AS16. These are the 8 accounting standards which are covered in the curriculum, and we have to understand the provisions of each and every accounting standard in such a manner that the practical application of the accounting standards is very much clear to us. So when we study about the structure of the question paper, we have already discussed about question number 1, where we are having 4 parts. You can see the PPT also. From question number 1, we are having 4 parts of 5 marks each, that is in total 20 marks. In question number 2, we are having the question from section 2. Section 2 means what? Chapter number 9, 10 and 11 from module 2. Chapter 9 is on investment, then we have insurance claim, and then we have hire purchase. From this particular section, we have to prepare ourselves in such a manner that we can be asked to complete one question of 15 marks, or 2 or more questions may be asked from this particular section, maybe of 10 plus 10 marks. This section is also very important. This section is based morely on computational aspects, where maybe we may be asked to use average clause in insurance claim. Consequential loss policy may also be covered therein. However, for chapter 9 investment accounts, AS 13 is also applicable. So this is an interlinking of accounting standard with the topic of investment accounts. Then question number 3, where we are having 2 application oriented questions based on section 3. Section 3 means module 3, chapter number 13 and 14. Chapter 12, 13 and 14 will be covered in this particular portion. Again, in question number 4, we will be having section 4. Section 4, as we have already discussed, the section 4 is based on company accounts, and entire module 2. That means from chapter 4 to chapter 8 are covered therein. One full-fledged question will be asked from this particular section, which is very important. So that is the reason we are more and more emphasizing on schedule 3 requirements, because the format of schedule 3 should be very thorough to us. Otherwise, we will not be able to present the financial statements of a company from the given information or trial balance, whichever is being given to us in the question, and we have to solve the question accordingly. We have to prepare the financial statements of the company in the desired manner of schedule 3 format. Whether it's a question of bonus issue, whether it's a question of redemption of preference shares, or it's a question of redemption of debentures, in each and every topic, we may be asked to prepare the balance sheet of the company. However, the statement of profit and loss will only be required in chapter 4 itself, which has to be presented in the format of schedule 3. So the most important segment of our syllabus is section 4. In question number 5, we will have a combination of section 2 and section 4. The last section of the last question of the question paper is question number 6, where we will be having 5 parts, and out of which we will be required to answer any 4. In this, we will be having section 1 and section 4 coverage, where we can be asked to answer comprehension and knowledge based question plus application and analysis questions. From question number 1 to question number 5, it's very clear that we will be asked to answer only application and analysis question. It's very rare that any particular question on comprehension and knowledge may be asked. So what exactly is comprehension and knowledge? Comprehension and knowledge may be, students may be required to answer certain provision of the accounting standard, or certain concept, maybe the basis of allocation under departmental accounting. What is the definition of integral foreign operation or non-integral foreign operation? How to determine whether it's a qualifying asset or not, as per AS 16 borrowing cost. Such type of question may be there, which may be based under comprehension and knowledge questions. And what exactly is application analysis? Under application analysis, we will be asked to apply the provisions of the accounting standards. We may be asked to apply the concept which we have already learned in the study material under various chapters. So the practical application of the concepts, where we are asked to analyze the given situation, and we are asked to compute something based on the provisions of the accounting standards, or based on the concepts which we have already discussed in the chapters. This is all regarding the structure of the question paper. We have already understood the structure of our syllabus, what is the bifurcation of our syllabus in section-wise and skill-wise weightage, and how we have to go for. It's very important, my dear students, to understand the structure of our question paper before proceeding for the preparation strategy. As you know, while preparing for the subject of accounting, it's very important to understand the contents of the study material. Moreover, the practice of the illustrations, whatever is being given in the study material, is also very significant. There are a number of illustrations which are given in the study material, plus there are test your knowledge questions also given, which you can practice, but you have to make it a practice, not only to read the illustration, not only to read the solution, but also to solve the questions by your own hand, and then you can compare your solutions with the solutions given in the study material. You can also refer the previous examination question papers, their suggested answers, the RTPs, to have more and more data in the question bank, where you can use those questions for your practice purpose. So this is all about the structure of the question paper. Now coming back to the specific examination which we are here to discuss with, November 22 examination, how to go for it, how to prepare for it, what sources we can use for our practice, and what are the amendments which are applicable for November 22 examination. Till this time you have already received the RTP. You can refer the amendments in the RTP, but and you can practice the questions whatever is being given in the RTP for the benefit of your self-confidence. In accounting, to gain more and more confidence, we have to practice more and more questions, because generally in this paper, what happens, we are not able to complete the question paper within the prescribed limit of 3 hours. What is the problem? Why we are not able to complete the paper? Why the students fail to attempt the question paper? The problem is lack of practice. We know many students come to us and they complain the same thing. And when we ask them the concepts, when we ask them how they have undergone their studies, we are very much satisfied that with their replies, they have undergone the entire study material, they have practiced a lot, but still they are not able to complete the paper because they have not attempted the mock test. They have not attempted the question papers in one go. They don't know how to divide the time of our 3 hours in the question paper in such a manner that each and every question has to be allocated around 20 to 25 marks in first go. Then we have to revise our solution, and then we have to rectify whatever the mistakes we have committed, and we can rectify those mistakes and proceed further. So coming back to the specific provisions of our accounting standards, and to know the amendments which are applicable for the November 22 examination, let us discuss the amendments. As you know, the relevant notified sections of the Companies Act 2013 and legislative amendments including relevant notifications, circulars which have been issued up till the date of 30th April 2022 will be applicable for November 22 examination. The cutoff period is 6 months. That is, before 30th April, any amendment which has taken place, that will be applicable for November 22 examination. Any amendment after this will not be applicable. These are all the essentials of preparation that you already are aware of. You should know your subject very well. Time planning is also very important. In the examination hall also, we need to have proper time management, and while preparing for the subject also, we need to have proper time planning. We should study all the relevant materials. What are those relevant materials? First of all, the basis of our study should be the study material which has been provided to us. As you know, that our study material is divided into 14 chapters, 3 modules. In module 1, we are having 1 to 3 chapters. In module 2, we are having chapter number 4 to chapter number 8, that is entire company accounts portion. And in module number 3, we are having chapter number 9 to chapter number 14. For studying the chapters for the first time, we can prepare the notes, and for all the adjustments, any ticklish adjustment, all important adjustment, we can write note in register so that we can brush up our knowledge at a later stage of revision. We have to keep ourselves updated always, as previously told, that we have to make it a habit to access the institute's website on a regular basis to apprise ourselves about any of the latest development which have been taken place in the area of our subject. Then only we will be able to do justification to the chapters, and any redundant item, any redundant concept which is no more applicable, we are not required to study that. We are supposed to attempt mock test papers after these sessions. In the September itself, we will be having the first series of mock tests, and then we will be having the second series of mock tests. So you are advised to attempt all both these series and attempt the questions in the simulated examination conditions for your benefit only. Then only you will be able to justify and you will be able to assess yourself where you are. You should focus on your gray areas and you should improve your concepts in those areas only where you are lacking, where you are finding that there have been certain difficulties, you are not able to understand those concepts. So you should focus on those areas. As you know, in intermediate level, we are not expected to have the advanced knowledge of the accounting standards. This paper is requiring the conceptual understanding of the crucial aspects of accounting. Working knowledge is required for all the accounting standards. Already discussed that the syllabus of accounting has been segregated into 14 chapters for the purpose of its full coverage and study. What is the curriculum? The entire curriculum structure is, in chapter 1, we are having process of formulation of accounting standards, including Ind AS, IFRS, convergence versus adoption, objective and concept of carve-outs. You are only supposed to have the knowledge of these concepts on an overview basis. You are not supposed to go into detail of these subtopics. You just have to have the knowledge of these subtopics. And from this particular chapter, only 5 marks question will be asked, and that too a comprehension and knowledge question. So you have to prepare this chapter on those lines only. In chapter 2, we are having framework for preparation and presentation of financial statements. This as per accounting standards. This framework gives you the complete overview on what are the underlying principles on the basis of which the financial statements are to be prepared, what are the qualitative characteristics of financial statements, how to go for it, and how to prepare the financial statements, what is the basis of preparation of financial statement that has to be governed in this particular chapter. Then we have application of accounting standards, applicability of accounting standards, to which entities the accounting standards are applicable, to which entities we are giving certain exemptions or relaxations, in what respects. In majority of the cases, the exemptions or relaxations are being given to the entities in disclosure aspects, not towards measurement and recognition aspects. So that we have to see carefully. We will also undergo this in this session, that which are the entities to whom the exemptions has been granted regarding applicability of accounting standards. There are 8 accounting standards which are covered in the curriculum. So we are supposed to have the thorough knowledge of these accounting standards. While studying the accounting standards, we are, as a student, you are supposed to read the contents given in the study material. You can also refer the bare text of accounting standards. The accounting standards which are explained in the study material, they are in very simple language, which can clearly help you in understanding the principles of the accounting standards. All the disclosure aspects, all the measurement aspects have been very clearly explained in the standard itself. There are numerous illustrations which are given in the chapter for your understanding. So you can go through those illustrations also. Not only go through, but you have to make it a practice to solve these illustrations by your own hand. Accounting standards is a very important area of your curriculum. Because why it is so important? Because the concepts and the knowledge acquired from this particular portion, this particular area will form the basis of the understanding of the other topics also. Because if you have not understood any one particular accounting standard, you will not be able to understand various interconnected chapters. If you have not understood the concept of AS 11 for integral foreign operation or non-integral foreign operation, then it will be difficult for you to solve the questions of foreign branches. So it is very much essential to have the understanding of these accounting standards, because if one accounting standard or one particular aspect of the accounting standards is being missed by you, then you may not be able to solve the questions in the next chapters, in the succeeding chapters of your curriculum. So this is a basis of study, and how you have to study. You have to establish the interconnectivity also of the accounting standards. Like chapter 14, accounts of incomplete records is there. There is nothing to be studied, there is nothing to be understood in that chapter, but that chapter involves a knowledge of all the chapters in one go, because you have to understand the intricacies of the transactions, you have to understand the pattern of the transaction, and then you have to post each and every item. You have to post each and every transaction in the specific accounts, and then you can prepare the statement of affairs and profit and loss account as required for the particular chapter and as required in the question. You have to understand the requirement of the question, then you have to be very specific in answering the question. Then you have chapter 4, where preparation of financial statements of the companies is covered. We will discuss this in detail later on, where we will give the brief, in today's session, we will be giving the brief overview of the amendments which are applicable for November 22 examination. Also, we will be covering the significant aspects of certain important topics, and we will try to solve some important questions on these topics. We will also address the issue of the common mistakes which are generally being committed by the students, and how to overcome those mistakes. We will also guide you. Then we have investment, insurance claim, hire purchase, installment sale transaction. These are the small topics, and from these particular topics, the questions will be generally asked for 10 or 12 marks. But in certain examination, it has happened that a full-fledged question has been asked from the topic of investment accounting or insurance claims. So we have to prepare ourselves accordingly, that we should be able to answer the full-fledged question also. And all types of questions are given in our study material for these particular chapters. Then we have department, branch, and accounts of incomplete records. Regarding the applicability of study material, September 2021 edition is applicable for November 22 examination. And if you have any edition prior to this, you are advised to go through the portal, and you are advised to refer at least the chapters of company accounts from this particular edition, and chapter 3 also from this particular edition, because there has been an amendment in applicability criteria for the non-corporate entities, which was revised and in March 2021, and this has been duly incorporated in September 2021 edition. So let us discuss about the amendments which are applicable for November 22 examination. First important amendment is about Schedule 3. In Schedule 3, there have been certain additions which have been made by the Companies Act. What are those additions? Those additions have been added in the disclosure requirements. So nothing to worry about. Some classifications, some more detailed bifurcations have been added specifically regarding entities, and they will ensure transparency of our balance sheets. Significant amendment is, like earlier we used to show in statement of profit and loss. This is statement of profit and loss, where we were having revenue from operations, whatever it is, it may be the fictitious amount. I am taking some imaginary figures, and then you had other income. In the before the amendment, whatever the total was there, we used to describe it as total revenue. But now we are stating it as total income as per the amendment. So you have to see it while doing the questions of statement of profit and loss account. One more significant amendment is current maturities of long-term debt. In detail, we will discuss Schedule 3 classification also, because it's very important to understand all the items given in Schedule 3, what we have to show on the face of the balance sheet, on the face of the profit and loss statement, and what we are supposed to give as notes to accounts. So those classifications have to be understood very clearly. We will discuss them. Current maturities of long-term debt. Earlier, we used to show it as current liabilities, but after the amendment, we are showing it as short-term borrowings. However, other things like interest accrued on loan, interest not accrued on borrowings, long-term debt, they are still being shown under the head current liabilities only, as we were showing them earlier. So these are these two are the important amendments which we have to take into consideration while solving the questions of Schedule 3. Then regarding criteria for classification of non-corporate entities, as far as applicability of accounting standards is concerned, you know that earlier we used to have only 3 levels: level 1, level 2, and level 3, where level 1 was large, level 2 was medium, and level 3 is small. This is before the amendment of 2021. But now we are having 4 categories of enterprises. What are those 4 categories? Level 4 has also been introduced. This is micro. Basically, this is very small entity. This is micro level entity. So now we are having level 1 entities as large size, level 2 as medium size, and level 3 entities as small size. One new addition is level 4 as micro entities. The threshold limit for each and every entity type has also been changed. For level 1 entity, earlier we used to have 50 crore for turnover and 10 crore for borrowing. This was the limit earlier, but now the limits have been revised. They have been enhanced so that benefit of relaxations, benefit of exemptions can be granted to more and more entities. Now this limit has been changed to 250 crores. And this 10 crore limit has been extended to 50 crores for large size entities. What about medium? In each and every category, there has been a change. So, any entity whose turnover is between 50 to 250 is now medium, and 10 to 50 is like borrowings, for borrowings. So now the limit is for large size entities, we are having the threshold limit of 250 crores, and for borrowings it is 50 crores. So if any entity is having more than 250 crores of turnover, it will be considered as large entity, large size entity. If any entity is having borrowings of more than 50 crores, then also it will be considered as large size entity. Any of the criteria, if gets fulfilled, then it will be falling under the large size category. What about medium? In medium, we are having the criteria of turnover of 50 to 250, means more than 50 but less than 250, and in borrowings we are having 10 to 50, more than 10 but less than 50. In small size entity we are having 10 to 50 for turnover, and for borrowings we are having 2 to 10. What about micro level entity? For micro level entity, the limit is now any entity whose turnover is less than 10 or borrowings is less than 2 crores, and it will be construed as small micro entity. Basically, it will be a micro entity. And many exemptions have been granted to micro entities. In fact, certain accounting standards are completely exempted for them. They are not bound to comply with those accounting standards. So this new category, which has been introduced by the Council of ICAI, where this particular category has been granted various exemptions for the sake of applicability of accounting standards. Level 2 and level 3 means medium and small. They have also been granted certain exemptions where disclosure requirements, they have been exempted from certain accounting standards. Now let us take the question on this applicability. We will also take up certain queries. Let us take the applicability of accounting standards and accounting standards question in one go. I hope the applicability of accounting standards to non-corporate entities is clear to you now. In chapter 3 unit 1, this entire portion has been explained. In chapter 3 unit 1 in September 2021 edition, this unit has been updated in line with the scheme of applicability of accounting standards to non-corporate entities. And this chapter 4 of module 2 has also been revised in line with the amendment of schedule 3. So that is the reason I am emphasizing on you to go for the new study materials, and if you have previous editions, so that you can read from the updated material. Now you take this particular question on applicability of accounting standards. Here it is clearly given that this partnership firm had a turnover of 1.25 crore and borrowings of 0.95 crore. Now, what size of entity it is? As I have told you that if the entity has turnover of less than 2 crore, then it will be called as micro entity. And if the borrowings are less than 2 crore, then it will be a entity of micro level. It has turnover of 1.25 crore, which is less than 10 crores. sorry, it is 10 crores. Less than 10 crores, it is a micro level entity. So, non-corporate entities which meet the following criteria are classified as level 4 entities. Level 4 is micro. All entities engaged in commercial, industrial or business activities whose turnover excluding other income does not exceed rupees 10 crore in the immediately preceding accounting year. It means because its turnover is less than 10 crore, its turnover is less than 10 crore, so it will fall under this particular category. Its turnover is 1.25 crores. And what about borrowings? Borrowings, if it does not exceed rupees 2 crores, does not exceed rupees 2 crore at any time during the immediately preceding accounting year. So now, as it falls under both the categories, it will be considered to be a micro level entity. What will happen if its borrowings are, suppose the borrowings are 2.1 crores. However, the turnover is still 1.25 crore. Then in that situation, what will happen? This will not be micro level entity in that case. It will fall under small entity category. Got it? In this case, because it's a micro level entity, AS3, AS14, AS17, AS18, AS20, AS21, 23, 24, 25, 27 and 28 will not be applicable. However, as far as your syllabus is concerned, you are familiar with only AS3, but there are, you can see for micro level entity, so many exemptions have been granted by the ICI for applicability part. They are not supposed to comply with these accounting standards, and certain relaxations have also been given in respect of AS10, 11, 13, 19, 15, AS19, AS22 are also available. So if this question, if this type of question, applicability of accounting standards is being asked in the examination, first of all, what we have to write? Generally, what we do, the students, what mistake they commit, they simply write that this is not a small entity, it will be covered in a micro level entity. But we have to explain the criteria on what basis we are dividing. We cannot just switch over to the conclusion portion, but we have to substantiate our answer with the provision first, and then only we can say, we can justify our answer that this is a situation why it is a micro level entity. Then we can say that what exemptions have been granted to the to this particular entity regarding applicability. You may not be able to remember the number of all the accounting standards in this. You can, even if you write the certain accounting standards are being exempted because it's a micro level entity, and certain accounting standards have been exempted in respect of disclosure requirements, then also from you will be getting the marks. Now we will be coming to the specific problems on accounting standards. Generally, the difficult area for the students is this particular portion. They are not able to understand the requirement of the question. They are not able to connect the accounting standard to which the problem relate, and that is the reason they are not able to score good marks in the portion relating to accounting standards. Like in this particular question, you can see, first of all, we will have to judge which accounting standard it is dealing with. This entity is making provision for non-moving stocks based on stock not issued for the last 12 months up to this particular date. Now the company wants to make provision based on technical evaluation during the year ending this. Total value of stock is this. It hardly matters to us. This is the total value of stock. Provision required based on technical evaluation is 4 lakh, and provision required based on 12 months not issued is 5 lakh. So now, earlier we were making the provision based on 12 months not issued, which is 5 lakh, and now we are changing our provision on the basis of technical evaluation, which is 4 lakh. It means what? We are providing less provision by 1 lakh. Less provision by 1 lakh. Now in this particular question, what we have to see, whether this change is a change in accounting policy or it's a change in accounting estimate. We have to judge this, that whether this change is a change in accounting policy or not. What are accounting policies? Accounting policies refer to the specific accounting principles which have been followed while preparing the financial statements. This policy should be what? Policy should be like this, that whether we are making the provision on non-moving stocks or not, on what basis we are making the provision, that is not a policy. So this is not a policy. We are not making any change in the policy because the policy is actually that we are making provision. This is a policy. If we stop making provision, then we are making a change in policy. But on what basis we are making the provision? It is a change. It is a estimate actually. So now we will have to see whether this change in estimate is going to affect significantly or not. Nothing is given in the question about this, about the scale of operations of the entity. So in lieu of the information given in the question, we have to score our marks and we have to give the complete answer. Here, the method of estimating the amount of provision may be changed in case a more prudent estimate can be made. In given case, considering the total value of inventory, the change in the amount of required provision of non-moving stock from 5 lakh to 4 lakh is, however, not material, but still disclosure can be made in the following manner. So generally what will we do in the examination? What the students make mistake? They complete the answer here only and they do not write the further note to account. You should understand that the question requires you to disclose, to give the disclosure requirement of this particular portion. Borrowings are less than 2 crores or turnover of 10 crore. Yes, borrowing should be less than 2 crore for micro level entity and turnover should be less than 10 crore for micro level entity. This is a query actually. Abhishek Soni is asking. Krishna Sharma is also asking the same query. And one student is asking about that in which chapters there have been amendments. So that's what I have told you, that in chapter 3 unit 1 applicability of accounting standard there has been amendment. So you have to refer the September 21 edition, and in schedule 3 there has been amendment, and due to which the entire portion of company accounts you have to refer the new study material. It would be better because there may be certain changes in the format of schedule. There may be certain changes in the presentation of balance sheet of companies in questions of redemption of preference shares and redemption of debentures also. So it should be for your betterment only. It is better that if you buy for the new one, or you can download the relevant chapters from the knowledge portal and you can refer the updated ones. Miss Manon is asking about small entity. Small entity is any entity whose borrowings are more than 2 crore and turnover is more than 10 crore. 10 to 20 and 2 to 10. That is basically the threshold limit for the small entity. This was about the disclosure of accounting policy, and how to give the note of disclosure is also clear to us, that we have to write the company has provided for non-moving inventories on the basis of technical evaluation. Unlike preceding years, had the same been followed, what should have been the profit should have been lesser by rupees 1 lakh. Because now the provision we are making for the less amount. We are now making the provision for 4 lakh. Earlier we were making the provision of 5 lakhs. The same way, another question I want to show you, that where the company decide to change from FIFO to weighted average for ascertaining the cost of inventory. On the basis of weighted average method, cost of the closing stock amounts to rupees 1,15,000 and realizable value is 1,54,000. So first of all, we have to determine what is the cost, and for cost purpose, we have to see that earlier we were following FIFO where the amount was 1,24,000, but now we are following on the basis of weighted average, we are following 1 lakh amount of 1,15,000, which is reduced by 9,000 rupees. So, however, the cost or NRV, whichever is less, the golden principle of AS2 states. But in this present case, we have to determine the inventory at cost because the NRV is more than cost. So, it will be valued at rupees 1,15,000 in the present case. And because we are reducing the value of inventory by rupees 9,000, we have to give the proper disclosure, because change in inventory method valuation is also a policy, and if there has been a change in this, we have to disclose it as per AS1. You can see the disclosure aspect of this particular question. The change in policy has reduced current profit and the value of inventory by rupees 9,000. Now we will take a question on AS2. AS2 is based on valuation of inventories. Inventory consists of raw materials, finished goods, or any work in progress, whatever it is. And the principle is cost and net realizable value, whichever is less. For determining the cost of finished goods, if we are producing ourselves, we have to determine the cost of production, where we will be taking the fixed overheads as well as variable overheads. The cost of raw materials will also be there. So let us take this question. It has some important adjustments which I would like you to understand. In this question, it is given that we purchased 20,000 kilogram of raw material. Here, the closing inventory of this particular entity consists of two items, finished goods and raw materials. So basically, there are two categories of goods for which we have to determine the value. For finished goods as well as for raw materials. For finished goods, how will you value the inventory? First of all, you have to determine the cost of finished goods. Now, you can see for determining the cost of finished goods, we have to calculate the value of raw material which has been consumed. In the raw material, you can see the opening inventory is 2,200. We had purchased 20,000 and it is 22,200, and we had closing inventory of 1,800. So it means this is the quantity of raw material which we have used, which we have consumed. So we have taken this cost of raw material consumed 20,400. At what rate we are taking? We are taking at rupees 20 because the raw material purchased at rupees 20 and the opening inventory of raw materials was also at rupees 20. So whatever basis of method we are adopting, whether it's FIFO or weighted average, the cost of raw material per unit will be only rupees 20. However, if here the value is same, but in suppose the purchase of raw material at rupees 21, not 20, then what will you have done? If you are following FIFO, in that case, the raw material at the end, the raw material balance you are having at the end will be at rupees 21 and not at rupees 20. So for valuation of closing finished goods, first of all, we have to determine the cost of raw material consumed, which we have determined 20,400 units at rupees 20 per kg, 4,08,000. This may, however, consist of two things. If the price of purchase during the year might have been 21, in that case, what would happen? In that case, we would have taken 2022 at rupees 20 and the balance of 18,200 at rupees 21. If this risk we introduced in the question, if because we have taken initially we have taken simple question to make it more clear, but we could have taken a twist in the question by taking this as rupees 21 and applying FIFO. In that case, this cost of raw material consumed would have been changed to 2,200 into 20 plus 2,000 into 200 into 21. Direct labor is, we are giving the cost of direct labor 3,06,000 and fixed production overheads is 3 lakh. Now, how will we bifurcate this fixed production overheads on the base on these cost of our finished products on the basis of the normal capacity? Here, the plant has a capacity to produce 30,000 units of finished product per annum. However, we are not producing that much. We are producing only, we are producing less inventory. We are taking the finished goods opening inventory as 2,000 and closing inventory of finished goods we are given is 2,400 and sale we are having 20,000. It means we are producing less. 2,000 plus 20,000 minus 2,400, we are producing only that much quantity. However, we have a capacity to produce of 30,000 units. It's also given here that actual production is 20,400, which is very clear. So now what we have to determine, we have to determine it allocation of fixed overheads to our cost of production is 3 lakh divided by 30,000 into 20,400. 20,400 is a this and this is same. This does not mean that these are the same units, because this is a cost. These are the finished goods which have been produced. This is basically connecting with this. It is coincidence that this amount is, this calculation of unit is same as the calculation of cost, as the calculation of actual production during the year. So now we can determine the cost of production. We have the cost of raw material consumed, which we have calculated from the working note. We have direct labor also, 3,06,000, which is clearly given in the question itself. And we have fixed production overheads, which is 2,04,000, means 3 lakh, which was the fixed production overheads incurred during the year. This divided by the normal capacity of production, 30,000 units. So we have cost of production as 9,18,000, and now we have to determine the cost of closing inventory of finished goods. Cost of closing inventory of finished goods will be determined as 9,18,000 divided by 20,400 units, which is the year-end inventory with us. So we will have the per unit cost of 45. Why we are calculating per unit cost? Because we have to compare it with the net realizable value of the finished goods at the year end. You are given that the net realizable value of the finished goods is 40 rupees per unit. and we are having the cost of 45. It means that we have to value the inventory at rupees 40 only. So how will you determine the value of closing inventory of finished goods? This will be computed as 40 into 20,400. And how will you determine the value of raw materials at the year end? Raw materials at the year end is 1,800. And the cost is 20 per kg. However, the NRV of raw material is 19 per kg. So it will again be valued at rupees 19 because it will be valued at NRV because the cost is more than this. If the NRV would have been 21, in that case, it would have been valued at rupees 20 itself. However, the raw materials can be valued at a higher price. They can be valued at cost if the finished goods in which they will be incorporated are expected to be sold at or above cost. It means if the raw material price, selling price is rupees 21 and the cost is 20, then we have to determine, then we have to value the inventory of raw material at rupees 20 only. But if its cost is rupees 20 and NRV is same, that is 19, then we can determine the cost as rupees 20 if, but the condition is that in which finished goods it is expected to be used. They are either they are expected to be sold at or above cost. But in the present case, in the question, our finished goods are also not, we are not able to sell them at above the price because the cost of production is 45 and net realizable value is 40. So we are not able to solve that particular product above the cost. Hence, we have to value the inventory of raw materials at the NRV only, that is below cost. So now the total value of closing inventory is 2,400 into rupees 14 per unit, 40 rupees per unit, that is 96,000, and 1,800 kg into rupees 19 per kg, that is rupees 34,200. This is regarding AS2. Revati is asking about the RTP November 22. No, this is not November RTP. This is not November RTP. We have taken the questions from the previous examinations, suggested answers. Some previous RTPs also we have considered for framing the questions. We have just selected the questions which can make the concept of that accounting standard more clear to you. And if the question involves some ticklish issues or some areas where we can make you understand, those questions we have taken, these are not entirely the RTP questions. They are not exactly all the questions of the RTP. Actually, in the accounting standard question, first of all, we have to see what the question is asking. We have to see the scenario of the question. If the question is asking about the particular accounting treatment for the particular item which is being asked in the question, then we have to solve it accordingly. If the question says that this treatment has been done, if the question says that the accountant has done this particular treatment, then we have to say that this treatment is incorrect and we have to rectify that particular accounting treatment. We have to justify that why this treatment is necessary and why the treatment done by the accountant is incorrect. First of all, I would like to say in all those questions, because we are receiving queries for the accounting standard where the students are asking us that whether to code the number of accounting standard, whether to code the name of the accounting standard, is it very much essential? No, it's not essential, but the para number is not important to be mentioned, but you have to connect the question, you have to connect the scenario with the accounting standard. At least you have to write that this particular accounting standard is a standard to which this question pertains, and what are the provisions of the accounting standards which relate with this particular situation, and how to solve that particular question, what should be the correct treatment. Shipra, you are asking about that is the study material enough for practice of AS questions? Yes, I would say that you can, there are numerous questions given in the study material for application of accounting standards. You can solve the questions accordingly. You can refer the questions. However, for more practice, you can refer the previous RTPs and previous suggested answers also, previous examination question papers to whom the answers have been given by us as part of BoS knowledge inputs. As part of BoS knowledge portal, we are providing you the suggested answers. You can refer those suggested answers also, because if you just see the previous examination question papers, then you are not able to know that what should be the correct answer for a particular question. That is why we are emphasizing on the suggested answers. You know the pattern of how to answer a particular question. You know how to solve a particular question and what should be the basis of answering the question so that we can get full score. Actually, our aim is not only to answer the question, but we want you to write the answers in such a manner that you get the maximum marks. Ma'am, how to manage time and allocate time? Nigambhad has asked. The question paper, Nigambhad, is not very lengthy. It's always manageable to complete the paper within the prescribed time limit of 3 hours. The only problem is that why we are not able to complete the paper is the problem is that we do not practice. So that is why when we do not see the familiar type of questions in the examination, we get uncomfortable. We see some new adjustment, we see some new point in the question, we see some new information in the question which we have not seen earlier in the study material questions. Then we fumble, we are not able to attempt the question, we become nervous, and that is why the time is being wasted, and due to that reason only we are not able to complete the question. If we remain focused and if we do not, if we concentrate only on the requirements of the question, then I think we will not be able to, it will not be the situation that we will not be able to complete the question paper within the prescribed time limit. Actually, we wanted to take one question on each accounting standard, and that is the reason that we are taking too much time, because I do not want to skip any of the accounting standard. We will move faster and we will take one small question on accounting standard. This question is based on AS3, application of accounting standard. Application of accounting standard of cash flow statement. Now you can see in cash flow statement, basically we have to divide our entire cash flows into 3 categories. Cash flow from investing activity, cash flow from operating activities, and cash flow from financing activity. What are operating activities? Operating activities are those activities which are principally revenue generating activities, which are part and parcel of operations of the business entity. What are financing activities? Which relate to the finance of the company, like issue of share capital, redemption of preference shares. These all will be covered under the category of financing activity. Then we have investing activities. Investing activity means any funds, any cash which we are investing in long-term assets and investments. Not in current, because current investments are not part and parcel of this investing activities. Whatever investments are covered under cash and cash equivalents, they will also not be covered here, because they are very marketable and we are able to sell them with minimum change in value, with insignificant change in value. We are able to sell them, we are able to realize them. That is the reason we are including them in cash and cash equivalents. Now in this particular question, you see we are not asked to prepare the complete cash flow statement. This is a very tricky question in which we are only asked to disclose these particular items given in the from the extract of balance sheet in the cash flow statement. Now you can see the position of these items on 31st March 2020 is given to us, and position of these items on 31st March 2021 is given to us. How we have to disclose it in cash flow statement, and what type of mistakes we generally make while disclosing them. You can see that there has been an increase of equity capital from rupees 25 lakh to 35 lakh 60,000. It means 10 lakh 60,000 is the increase in equity share capital. It is given to us that equity share capital for the year ended 31st March 2021 includes 60,000 of equity shares issued to Grey Limited at par for supply of 60,000. It means it does not involve any inflow or outflow of cash. It does not involve any inflow or outflow of cash because these equity shares you have issued for supply of machinery. You are getting the machinery and you are issuing the equity shares. So there is no flow of cash. So should I show this as financing activity? Should I show this as financing activity? No. Because 60,000 is not to be shown as part and parcel of this. So this we are showing it here. The proceeds of issuance of share capital only 10 lakh we are showing, not 60,000, because that 60,000 is not to be shown in the cash flow statement. And some amount of securities premium is also there, 50,000. 5 lakh 50,000. That means 50,000 of securities premium has been received during the year, which will also be part of financing inflow, financing activity inflow. So this amount is clear to us. This amount is clear to us. 10 lakh 50,000 is clear to us. We are not supposed to give anything else from on inflow side of cash flow from financing activity. Then we have 10% preference share capital at the beginning of year, and at the end we have 6 lakh. It means what? Some redemption has taken place. Some preference shares have been redeemed during the year. So we have to show as a deduction in financing activity. So this amount is clear. Cash flow from investing activity, we can show what amount, what we have to show as cash flow from investing activity. Any interest or dividend we are receiving from investment, that will be considered as an income from investing activity, and that will be shown as inflow of cash under investing activity. So dividend received 50,000 will be coming here as investing activity. Cash flow from operating activities, what will be there under cash flow from operating activity? Now we are having indirect method. We have to use here indirect method because we are giving the profit and loss account. So it means there has been a profit earned during the year of rupees 8 lakh. 8 lakh profit has been earned during the year. And it is also mentioned that 50,000 you had received dividend. The company has received dividend for 50,000, which might have been credited to profit and loss account only. So it means that it should not be 8 lakh, but it should be 7 lakh 50,000, because 50,000 we have to reduce. We have already credited to our P&L account. Now we have to reduce it. So this is a disclosure for entire cash. The question is asking you the smarter things in a smart manner. The question does not ask you to prepare a complete cash flow statement. The question only requires you to disclose these particular items in the cash flow statement. It will not be matching. It will not be the complete cash flow statement, but only certain items are given to us, and we have to see what the change is there as compared to beginning of the year. At the end, what change has been there and what is the increase or decrease in the cash flow, that we have to show in the cash flow statement of the entity. So I hope this question is clear. Now we can move to property, plant and equipment question. AS10 is basically dealing with property, plant and equipment, where the cost of purchase has to be considered as cost of property, plant and equipment. Moreover, all directly attributable costs have to be considered as part of that. The provisions of depreciation, retirement and disposal, they are also covered under this standard. Now we are coming to the simple problem on AS10, where we are showing that how to compute the cost of the item of property, plant and equipment, and what mistakes generally we do while computing this cost. In this question, it is given to us that some machinery is to be purchased and special foundations were required for the machinery which were to be prepared within the supply lead time. The cost of site preparation laying foundations for rupees 1,40,000. First of all, it has to be judged whether this cost is to be considered as part of cost of property, plant and equipment or not. Purchase price, the machine was purchased at rupees 158 lakh. This is very sure that this will be covered under cost of property, plant and equipment. This will be covered as cost of PPE. There is no doubt about it. So it is very clear that this cost 158 lakh will be covered. Site preparation cost is also part of cost for item of property, plant and equipment because it is considered to be a directly attributable cost. So it is to be considered as this particular cost. Now about technician salary. It is a very much dilemma among the students whether to consider this cost as cost of property, plant and equipment, or it is a general administration overhead which can be charged to profit and loss account. We have to see what is the nature of the technician salary, whether the technician had come to make the machine start, or it was the machine was under running condition, the machine had already was under running condition, and it was a technician's visit was just to make a repair kind of thing. That we have to see. Now it is given to us that there was a technician during the entire period who is employed for the said purpose of 45,000 per month. As per the information given in the question, it seems apparent that the cost of site preparation and laying foundations was going on, and the machine was under the process of being installation. So you have to charge this 45,000 per month at the part of cost of property, plant and equipment. Why? Because it seems to be directly attributable cost for this particular item of machine. 3 months time period has been there. So that is the reason we are multiplying it with rupees with 3 months, 45,000 rupees into 3, because the machinery was prepared for ready to use condition in 3 months time. So this is 45,000 into 3, and whatever transportation costs are being incurred, that is definitely a capital expenditure that has to be definitely considered as part of property, plant and equipment. Now architect fee has been incurred at rupees 30,000 to supervise machinery installation at the factory date. Because it relates with the installation of the machinery, that it is also to be added to the cost of property, plant and machinery. So all these costs will be added to find out the total cost of machinery. Now, if it is given that its residual value is rupees 55,000, then and useful life is 10 years. The total cost of the machinery we have determined at rupees 161,55,000. Useful life is 10 years and the residual value is 55,000. It means 161 lakh has to be divided by 10, and this will be getting the depreciation, that is 16,10,000 per year. So this is a way how we have to determine the cost of machinery and how to determine the depreciation accordingly. Any cost which is being incurred on the machinery after it's ready for use, after it's properly installed, it is into running condition, that expenditure will not be considered as the capital expenditure, and that will not be added to the cost of property, plant and equipment. So we have to judge the cost in a very judgmental manner, and we have to decide that whether this cost can be considered to be the cost which is attributable to that particular item of PPE or not. And when we are determining the cost, we also have to see from depreciation aspect that all the significant items of any particular machinery which is significant in relation to the cost of the machinery, all parts have to be depreciated separately. They have to be depreciated separately, all parts of the machinery which are significant in relation to the value of the total machinery. They have to be depreciated separately because they may be having useful life separate. It does not mean that if one in total the machinery is having the useful life of 10 years, but every part of that machinery may be having the different useful lives. So we have to determine the amount of depreciation accordingly. So for calculating depreciation also, because we are taking the cost of the item of category of property, plant, and equipment, we are also calculating the depreciation here in this. So now if a machinery is constructed for its own use and useful life is 10 years, construction is completed on 1st April 2021, but the company does not begin using the machine until 31st March 22. Should we provide any depreciation on it or not? Apply your judgmental skills. If the construction got completed and the company was able to use that particular machinery from this particular date, then definitely depreciation needs to be provided. It does not mean that whatever date you are starting the use of the machine, from that date only we have to charge depreciation. This is not correct. So if the company is charging the depreciation from this particular date and not charging the depreciation from 1st April 2021, then the company is incorrect. It is not following the correct treatment. The machinery, when it gets ready for use, whether you are using it for further production or not, whether you are using it for any purpose or not, it does not mean that you are not required to charge the depreciation. If the machinery is ready for use, then you are supposed to charge the depreciation on that particular machine. This is the same situation which we already discussed earlier. Machinery purchased on 1st April 2019 for 50,000 with useful life of 5 years and residual value nil. On 1st April 2021, management decided to use this asset for further 2 years period. It means 1st April 21, what position is on this particular date? 50,000, useful life 5 years, residual value 0. It means you are providing depreciation at the rate of 10,000 per year. Now, on 1st April 21, you have already provided depreciation for 20,000 rupees. Your machinery is having the carrying value of 30,000. But now you say that you are able to use this particular machine only for the further 2 years. It means change in estimated useful life of the machinery has taken place, which is a change in accounting estimate, and it will be disclosed as per AS 5. It will not be treated as a change in accounting policy, but it will be treated as a change in accounting estimate. Now this 30,000 amount, now you have to write it off over a period of 2 years. So now you will provide the depreciation 15,000 per year. I hope this provision of the standard is clear to you. You should understand how to calculate the cost of item of property, plant, and equipment, how to determine the depreciation. If certain asset is being retired or disposed, then how to how to reduce it from the balance of our plant and machinery carrying value. Any profit or loss on disposal, if it is there, then how to solve the question on that. The profit or gain arising on disposal has to be taken to statement of profit and loss. One important aspect of the standard is revaluation also. What happens in case a revaluation of any item of property, plant, and equipment has taken place? Suppose the machine has rupees 100 as a carrying value. Now we want to revalue this particular machine at rupees 120. We will have to create revaluation surplus. On revaluation also, the question may be asked in the examination. However, suppose in the earlier year, we had revalued it downwards. That means now the book value is 100. We are revaluing it further upward by rupees 20. Earlier, this machine was 110 carrying value, and we had revalued it to rupees 100 in the last accounting year, in the previous accounting year 2021 to 90. So till the point 10 lakhs, we are taking it rupees 10. Let us take rupees 10 only for simplicity of understanding. So rupees 10, we had earlier debited to profit and loss statement. Now we have to credit it to profit and loss statement. If we are revaluing our asset from 100 to 20, that means 120 means there has been a difference of 20 rupees. Now we have to only take 10 rupees to revaluation surplus, and 10 rupees we have to take to profit and loss account. 10 rupees we will be taking to profit and loss account. In the similar manner, if the situation is vice versa, that means we had machinery is in the books at rupees 100. We want to reduce it. We want to reduce it to rupees. Earlier the machine was having the value of rupees 100. Now we want to revalue it downwards to rupees 90. Then we will have to 10 rupees. We will have to take to profit and loss statement. We have to charge it to profit and loss statement. The revaluation loss has to be charged to profit and loss statement. But if earlier we had revalued it upward by rupees 10, suppose already this machine was revalued earlier by rupees 10 and revaluation surplus account is having rupees 10, then we are not required to charge anything to P&L account, but we have to reverse this revaluation surplus first. Whatever the difference is there, then only we can go to P&L statement. Otherwise, we have to settle from the revaluation surplus first, then only we can go to the revaluation profit and loss account. Revaluation gain or loss can be adjusted from profit and loss account. So both the situations are similar. First of all, any revaluation you are doing, you have to reverse the effect of the previous revaluation, then only you can go to the to account for the next level revaluation. Either it is profit and to charge it to profit and loss account, or to create revaluation surplus. Revaluation surplus is again a part of owner's funds. It is a part of owner's funds. It is a surplus, but it is not a free reserve. Then we have AS11. What exactly is AS11? AS11 tells us about how to account for foreign exchange fluctuations, foreign exchange rates. If any transaction the company is making with a foreign entity and it deals any purchase or sale and it is dealing in foreign exchange rates, then how to account for the exchange differences. Because if any transaction has been taken place during the year, we have to report that at the end of the year. We have to take the rates at the end of the year. Then how to account for that exchange gain or loss. Now in this particular question, we are seeing that an Indian company acquired long-term finance from a US company amounting rupees 40,88,952. The transaction was recorded at $1 at the rate of 72. It means $1 was to be considered at rupees 72 at that particular time. But on the balance sheet date, when we are preparing the financial statements, the rate of US dollar is 73.6. It means there is a gain of 1.6 to us because the exchange rate has been increased. Is it a gain? We have taken a long-term finance. It's a liability for us. And then when we are supposed to pay it, then we are required to pay more. So it's not a gain, it is a loss. It is a loss, and we have to charge it to statement of profit and loss account. But there is another option which is being granted to us. Let us discuss that also. You can see that we have taken this much dollar, 40,88,952 divided by 72, because $1 was $1 was equal to 72 rupees. So we were taking 40,88,952 rupees. It means that we took $56,791, and rate on balance sheet date is 73.6. So what is the difference? 1.6 into 56,791. It comes out to 90,866. This is the exchange difference loss we have to book. We have to charge it to statement of profit and loss account. As you know that AS 11 divides all the items into two categories, monetary and non-monetary. For all the monetary items, we have to consider the rate at the year end. When the reporting date is there, whatever the rate, foreign exchange rate that is applicable on that particular date, we have to report our financial statements on that particular basis. Any gain or loss, if there is, we have to account for it. But regarding the non-monetary items, we have to see that what type of item it is. And generally, if we are carrying it at historical cost, not at fair value, if we are carrying it at fair value, then we have to determine the exchange rate on the date at which we are determining the fair value. Otherwise, the date of purchase of that particular fixed asset. The date of purchase of fixed asset will be considered the date for the basis of exchange rate determination. So this is a case where we are having the loss of this much amount and we are supposed to write it off to our statement of profit and loss account, as AS 11 very clearly says. However, at the option of the entity, because this is a long-term finance which has been taken by the company, the difference can be accumulated in foreign currency monetary item translation difference account as an asset or a liability. If it's a depending upon it's a gain or loss, but in our case it's a loss, so it will be accumulated in foreign currency translation difference account, and it will be amortized over the balance of the over the period of the long-term loan or liability. One more thing is there, that as per para 46A of AS 11, if this loan was taken for the purpose of depreciable fixed asset, then we can make adjustment to the cost of fixed asset. We can add or reduce the value from the cost of fixed asset, and we can then provide depreciation accordingly. As per para 46A, we are having the option for depreciable fixed assets and we can make adjustment in the cost of fixed asset, and we can provide depreciation accordingly. The concept of integral found operation and non-integral found operation we will be discussing at the time of the question which we will be taking in the branch accounting. So right now we have covered AS 11, AS 1, AS 2, AS 3 and AS 10, and this is 5th standard AS 11. These type of questions generally being asked in the examination, and what kind of treatment we are supposed to give in the answer. You can see from the answer that we are never quoting the PAN number of the AS. Just to explain it further, because I'm not here quoting the PAN number, because if you do not mention the PAN number in the accounting standard question, you will not lose marks. But by quoting the wrong PAN number of the accounting standards, you will definitely lose marks. So it is better to skip the PAN number of the accounting standards. We have also not shown here because we want to show the way of answering in the examination, how to write the answers in the examination. You can see that we are very specific to the requirement of the question. If the question is asking us to calculate the amount of exchange difference and explain the accounting treatment needed in these cases, we are only restricting our answer to that only. We are not elaborating any provision of the accounting standard. We are not mentioning any definition of the items, monetary, non-monetary, whatsoever it is, because we have to restrict ourselves to the specific requirement of the question, and then we have to answer accordingly. Let us take certain queries are also there. Revti is asking that should we give the answer in the same manner as we are presenting here. Revti, it's always better to present the answers in the same manner, because the presentation is really material. Presentation really matters to score good marks. We have to be very specific to the requirement of the question, and we have to, in the accounting standard based questions, what exactly we are doing here also. First of all, we are seeing the facts given in the question. Like in disclosure of accounting policies question, I was mentioning it very clearly that the size of the operation of the entity, I do not know. It has not been mentioned in the question. Whether the component, whether the adjustment, whether the change in accounting policy is having a material effect or not, that I am not able to justify from the facts given in the question. Then what should I do? For presenting the answer in the complete manner so that I do not lose marks, what I am supposed to do is that I have to disclose it. I have to make a disclosure for that change in accounting policy, whether it hardly matters to me whether it's material or not for the size of the entity. I will just say that if it is having a significant effect, it should be disclosed. And if it is to be disclosed, then it is to be disclosed like this, because the disclosure part may be consisting of maybe 1.5 marks or maybe 2 marks. So why should I lose those marks? So depending upon the information of the question, if something is incomplete, if some information is incomplete in the question, if something is not given to us, then we cannot leave the scope for answering due to that particular restricted scope. We have to write the answer in complete manner, and we have just to say that even if it's not, even if it's significant, then we have to write this, and this to be disclosed as this. Why should we lose marks? So that is the main point. Yes, we have to give the conclusion. It depends upon the specific requirement of question to question, like whatever questions right now we have taken for this particular session. In AS 11 question, we are given that we have to calculate amount of exchange difference and explain the accounting treatment needed. So there was no point of writing the conclusion over there. In depreciation question also, there was no point of writing conclusion. But in AS1 question, there was a necessity of writing conclusion. So it depends upon the question to question specific requirement whether to write conclusion or not. We have to see if the question asks you to compute something, compute value of inventory, compute cost of property, plant and equipment, then there is no point in writing conclusion. We can straight away take the items, take the amounts, add or less, and make the computation. Even we are not asking you to write the provision of the accounting standard in those particular questions where the question asks you to determine something, to calculate something. Like in AS 11 question also, we are not mentioning any conclusion. We are just stating the alternative, because the question is not clearly specific. Now, why we are giving the alternative in this particular part of the question? Because the company is taking long-term finance, but it is not being mentioned to us that for what purpose it is being taken. If the long-term finance is being taken for the depreciable fixed asset, then again we can have the option. If it is not, then we have to mention the alternative treatment also. In second part of the question, we are having trade receivable. It's a very simple question. We are having trade receivable. So whatever the amount of difference is there due to the exchange rate increase, exchange rate hike of 0.220 paisa per dollar. So that hike has to be accounted for, because we took the trade receivable include amount receivable at the previous exchange rate on the date of sales, which was when $1 was 73.54. But now at the year end, the US dollar has increased to 73.6. This exchange gain, this is an exchange gain because we have now to receive more amount. It's not a liability for us. It's a debtor. It's a trade receivable. Now we are supposed to have more amount. So that is why, as per AS 11, we have to take it into profit and loss statement. So this is regarding AS 11. Moreover, you can also solve the questions which are given in the study material for these accounting standards. Integral foreign operation, non-integral foreign operation, we will be taking the conversion also here. All the integral, what is actually integral foreign operation? Integral foreign operation is a foreign operation, the operations of which is an integral part of the reporting business entity. It means it is integral to the reporting business entity. Is part, it more or less sort of integral to the operating entity, and we have to consider it as one and only one. It is nothing separate from us, from the reporting entity. Non-integral foreign operation, the operations of which are not integral, which are not part and parcel of the reporting business entity. And what is a conversion rate for all the monetary items? Either it is IFO, integral foreign operation, or it is non-integral foreign operation. At the reporting date, you have to convert all these items at the closing date. Monetary items are cash, bank balance, debtors, creditors, which are fixed, which are in determinable amounts of money. Non-monetary like fixed assets. For integral foreign operation, you have to report it on the date of purchase, and for non-integral foreign operation, we have to report it on the closing date. For inventory, we have to consider at the closing rate for the integral foreign operation as well as for non-integral foreign operation. However, for integral foreign operation, if rate on the date of purchase of inventory is available, then we can use that rate. Otherwise, closing rate is sufficient for both the types of operations. All the revenue items are converted at average rate, right? Whatever the expenses are there, sales commission, whatever the expenses are there, electricity, all these expenses, purchases, cost of goods sold, sales, all these revenues and expenses are converted at the average rate. But if the rate on the rate of transaction is available, then we can take that particular rate. Otherwise, average rate is suitable. For integral foreign operation, whatever the exchange difference is there, we are charging it to P&L account. But for non-integral foreign operation, we accumulate it in foreign currency reserve. Now we will be taking the specific queries also. Okay. In AS2 question, student is asking about some adjustment which is not clear. Revati, okay, let me clear it again. I am moving to AS2 question. In AS2 question, Revati, I was explaining that if any item of raw material which is being used in the production of finished goods, if that finished goods is capable of being sold at cost or more than cost, it means the recovery of cost is there, we are not supposed to value that particular inventory of finished goods, then cost of raw materials can be valued at cost, even if NRV is less than cost. Let me explain it with an example. If raw material inventory is 100 units, cost of raw material is rupees 10 per unit, and NRV is 9. Now, I can still take it as rupees 10. However, it is more than NRV, but the condition is what? This is only applicable for the raw materials, not for the finished goods. The condition is if this particular raw material is used for production of finished goods A, let it be used for finished goods A, whose cost is 100, but NRV is 120 or 110, more than 100. If it is more than 100, then we can take the raw material at cost, not NRV. Even if the NRV is less than cost, कॉस्ट पे ही वैल्यू किया जा सकता है अगर एनआरवी उससे कम भी है तो ये एक कंडीशन है, लेकिन दिस कंडीशन इज ओनली एप्लीकेबल फॉर द रॉ मटेरियल्स एंड द कंडीशन which is attached to it is the raw material which is being used in the production of finished goods. That finished goods must be, we are able to get at least cost, recovery cost का होना जरूरी है, 100 rupees पे इसको बिकना जरूरी है. If it is not, we are not able to sell it at rupees 100, then we are not able to value it at rupees 10. In that case, अगर इसका NRV अगर 90 है या NRV 100 से कम है, तब उस केस में हमें इसे 9 रुपए पे ही लेना पड़ेगा, 10 पे नहीं ले सकते. क्योंकि वैसे तो in any condition the general principle is value the inventory at cost or NRV, whichever is less. But it is a only specific exemption. It is only exception which is being provided to raw materials. But in the condition is the finished goods in which those raw materials are incorporated or are used, they are capable of being sold at cost or above cost. Then only we can value the raw materials at cost, even if it is more than NRV. I hope it's clear to you now. So the many queries have come to us, and specifically with regard to the solving of questions in the examination, how to present the answers. So basically, for accounting standard based questions, the specific requirement is that you have to understand the facts given in the question. Even if the facts are not complete, even if the facts somewhere some information you think is not complete in true sense, but we have to write the answer from the facts given in the question, and we have to give the complete answer. All assumptions we have to state in our answer. Any other option which is being possible, that also we have to incorporate in our answer, so that we should try to achieve full marks in the accounting standard based questions. 30 marks generally will be asked from this particular section of accounting standards, and there are 8 accounting standards. So we should be very careful while answering the question on accounting standards, and we should try at least to grab 27-28 marks out of that 30 marks portion, so that we can boost up our score. Now I will hand over the AS12 portion and AS13, AS12 and AS16 to Asha. She will explain some intricacies of these standards along with the problem solving on the standard.
Thank you, ma'am. Thank you, students, for listening this session very carefully. Sorry, I have some sore throat, but I will try to explain the concept so you will be able to understand the concept of AS12, AS13 and AS16, and it will be very helpful to you, so you can score very good marks in your exam. I think you all are very in enthusiasm mode and very active. Ma'am has beautifully explained and very clear all the concepts which are very required for you. Now moving to the AS12. What is AS12? Sorry. AS12 is related to the government grants. We are just revising the concepts of, because you are just revising because now 2 months time is left over, or it's just remaining for your exam, and we consider you have already completed the 1 period of your revision. AS12 is related to the government grants. What AS12 provides you? AS12 provides you the provisions which are related to the government grants. How will you recognize it? And in case of when you have to refund it, then what treatment which will you done? In government grant, what kind of grants which will be there? Grants, the government can provide the grants in the way of non-monetary, in the form of the any specific fixed assets, in the form of revenue, or it can be in the form of the contribution, capital contribution, which is known as the promoter contribution. Then how will you treat it? If it is a non-monetary asset, the non-monetary can be in the form of the land, or it can be in any other form. If it is a land or in any other form, the government can provide it at the concessional rate, or it can be provided as free. If government provide you at the concessional rate, then how will you recognize your grant in your books of accounts? Concessional rate, then you will recognize at your acquisition cost. And if it is free, that means you are paid nothing for your acquiring this, then you have to recognize your grant at nominal value. AS is already providing you all the provision that will help you for the recognition, de-recognition, and the treatment of any asset, any particular value or transaction. So in case of the non-monetary, we have cleared it. If it is concessional rate, then it will be recognized at acquisition cost, and if it is free, then it will be recognized at the nominal cost. If it is related to the specific fixed assets, for the specific fixed assets, the AS12 provide you the provision. You can give its 2 treatment. In 2 treatment, it can be treated as a deferred income, or just deduct from the cost of the asset. And if it is treated as a revenue, then it will be shown under the other income. And if it is related to the promoter contribution, then it will be as your part of the shareholders fund. So AS12 provide you all the provision how you will treat it and how will you recognize and de-recognize it. We will take an example. So we will move it to the example which is related to AS12. There is a Alphas Limited which has received the following grant from the government during the year 31st March 2021. In the first case, government has given a subsidy of rupees 120 lakhs from the central government. For which purpose central government give the subsidy? For setting up the industrial undertaking in the notified backward area. For attempting any accounting standard question, first we will advise you always read the information provided in the question very carefully and then apply the provisions of the related accounting standard. After it, you can solve it very easily. Now, the information provided in the question is central government is providing the subsidy of rupees 100 lakh for setting up the industrial undertaking in the notified backward area. Then what will be the treatment? Treatment will be this. It will be as in the nature of the promoter contribution. And AS12 says that any government grant which is received in the nature of the promoter contribution, then how will you treat it? You will treat is a net nature of the promoter contribution as a capital reserve. And ordinarily expected in respect thereof, the grant are treated as the capital reserve, which can neither be distributed as dividend nor considered as a deferred income. So what will he do? He will do that in this given case, the subsidy received from the central government for setting up the industrial undertaking, then it will be in relation to the specific fixed assets, not in relation of the revenue. So the amount of 120 lakh, it will be credited to the capital reserve. You have to conclude your answer by explaining this, that what will be the treatment of this 122 lakh. It will be treated as the capital reserve. What is the second condition? The second requirement of the question is that rupees 1500 lakhs grant received from the central government on installation of the treatment of a plant. That means the information provided in the question is that this grant of rupees 15 lakh is related to a specific fixed assets. And for the specific fixed asset, what the AS provided? AS says in case of the specific fixed assets, it gives the two options. You can treat it as deferred income, or you can also deduct it from the cost of the fixed assets. And what we are giving the answer? We are giving that as per AS12, this grant relates to the specific fixed assets. And for this, we have two alternatives. For one alternative, we will deduct from the gross value of the asset. For concerning its arriving at the book value. So we will deduct 15 lakh from the cost of the asset. After that, we will provide the depreciation and so on. The working will go on. Where the grants equal the whole or the virtually the whole, the cost of the asset is shown in the balance sheet at the nominal value. And for the second alternative, what we can do? We can treat it as deferred income. When we treat any government grant as a deferred income, that means we are not deducting, we are not going to reduce the cost of any asset. We will show this part of grant as a separately treatment we will be gone, no impact on the cost of the asset. That means if a fixed assets is for rupees 50 lakh, we will provide the depreciation of 50 lakh only, without deducting its cost in case of the deferred income. But if we provided the first option, if we are using the deduction from the gross value, then we will deduct 15 lakh from this 50 lakh. In the given case, 15 lakh was received as a grant from the central government for installation of treatment of plant. Since the grant was received for fixed assets, either of the above method can be adopted. Two methods are provided by the AS12 for the treatment of the grant which is related to specific fixed assets. The third part of the question is rupees 25 lakh received from the state government for providing medical facility to its workmen during the pandemic. Now read the information carefully. Is this 25 related to any specific assets? No. Whether it will increase the capital of the company? No. Then what it's related to? it is related to the revenue. Okay. And in case when we receive the government grant in the form of the revenue, what will be the treatment? Then AS says, when the grant is received in the nature of revenue grant, then it will be shown separately under the journal heading as other income. All the treatment is already provided by the AS. You just have to correlate your provision with the requirement of the question. So we always give suggestion to students, read the AS very thoroughly and try to understand it. Moving to the next example. MAC Limited received a government grant of ₹60 lakh for acquisition of machine. That means it is clearly mentioned in the question. This government grant is related to a specific fixed assets because it is clearly saying that it is for the acquisition of a machinery. What is the cost of the machinery? 300 lakh. And what is the value of the government grant? 60 lakh. The grant was credited to the cost of the asset. It is already saying the grant was credited to the cost of the asset. The estimated useful life of the machinery is 10 years. The machinery is depreciated at 10%. The company had to refund the grant in June 2020 or non-compliance of the certain conditions. जब भी कोई हमें कुछ भी देता है तो with certain conditions देता है. We have to fulfill all that conditions. If we fail to fulfill the conditions which are provided by the government, then we have to refund it. So it is clearly mentioned in the question. There is a non-compliance. In case of the non-compliance, you have to refund the grant. All the information is clearly provided in the question. You just have to read it carefully and then apply the provisions of the AS12. How the refund of the grant is dealt with in the books of the MAC Limited, assuming that company did not charge any depreciation for 21-22. Now, how will you solve this? It is already provided. What is the cost of the machinery? It is 300 lakh. And what is the amount of the government grant? Is 60. And it is provided in the information that it is the part of the asset. So it is use the one method that it will reduce the cost of the asset. So when he received the government grant, it reduced the cost of the assets. Cost is 300 less 60. That amount will be the 240 lakh. The company is providing depreciation on 240, not on 300. Why? Because it is treated the government grant after reducing the amount of 60 lakh. In case if it is not reducing it, that means it will show it as a deferred income. In case of the deferred income, the depreciation will be provided on the 300 lakh, no, not on 250. In this case, as it is reduced the government grant of 60 lakh from 300, now it will provide depreciation on 240. So on at the rate of the 10%, depreciation will be 24. For the first April 290, amount will be 216. Next year depreciation will be 21.60 and the value, book value will be 194. And so on at the time of the refund. In the month of the refund, when he has to refund, what will be the treatment is there? Then in the month of the June, it has to add back. Before this addition, there is only the simple calculation of the depreciation and its book value. The main adjustment is it has to add back the refund of the grant of 60 lakh. Why? Because company failed to fulfill the conditions. So it has to give all the grant which it has received, it has to refund it. So it will again increase the value of the asset. So it will add back 60. Now the revised book value will be the 172 plus 60, it will be 234. Prospectively, now company will provide depreciation on this amount, which is after adding the refund of the grant. Depreciation at the rate of 10% on revised book value amounting to 234 lakh is to be provided prospectively. Read this word very carefully. This is prospectively, not the retrospectively. In case of the retrospectively, that means usko starting se hi usko depreciation lagana padega. But now it is saying that prospectively, that means for the future. Future, the book value, it will consider the 232 over the residual useful life of the machinery. So we have, sorry, we have taken the two examples so that we can try to cover the concept of the AS12, which cover the refund of the government grant and the treatment of the government grant when you received it. Then what will be the journal entry? This journal entry is given at the time of the month of June, because it has to add back this 60 lakh. When it adding back 60 lakh, that means it is increasing the cost value of the machinery. So that's why we have debiting the machinery account to bank account.
One important point in this question is to be seen that the refund of the grant has taken place at what time? The refund of the grant has been taken place in June 2021. It means it is not at the beginning of the year. When it is not at the beginning of the year, then you might have provided depreciation for 2 months on the previous value, which was before refund of grant. So that part has to be taken care of. As you know, it's clearly written here, the depreciation at the rate of 10% on the revised book value of 232.044 lakh is to be provided prospectively over the residual useful life of the machinery. Now, as refund of grant has taken place in the June month, nothing has been provided to us by the question framework. So what we are supposed to do now, we will assume that it is the refund is at the beginning of June month and we have provided the depreciation for 2 months on the previous value, on the old book value, which is 172.044 lakhs. And then for the another 10 months, we have to take this value. This is the way we have solved the question. And if the depreciation, if the machine refund of grant has to be taken from deferred income balance, then nothing has to be done. We have to reverse the amount of deferred income grant. If this was not added to the cost of fixed asset. If at the time of receipt of grant, we have two options. Either we can treat it as reduction from the value of fixed asset, or we can treat it as deferred income. If we have treated as reduction from the value of fixed asset, then at the time of the refund, we have to add back that amount of refund to the value of machinery. But in the other alternative, when we are treating it as deferred income grant, then we have to reverse the amount of deferred income grant and we have to take it back. It means we were earlier used to take it to the P&L statement over period of time of the life of fixed asset. Now we have to reverse the entry for that and we have to debit it again for the amount of refund of grant. Now come to AS13, accounting for investments. As you know, under AS13, we can divide the investment into two categories, short term and long term, short term or current. The intention of holding the investment is very important for deciding the parameter for the classification of investment as to current or long term. So the intention to hold securities, the intention to hold investment, if it is for more than 1 year, then it is a long-term investment. Otherwise, it is current investments. For the current investments, you have to value the investment at cost or market value, cost or NRV, whichever is less. For the long-term investment, you have to always carry those investment at cost. So what AS 13 clearly says about the classification, we have two categories, current and long term. For current, we have to take cost or market value, whichever less. For long term, we have to carry always at cost. We can reduce the value of investment only if there is a permanent reduction in the value of investments. If there is permanent reduction in the value of investment and the indicators are very clear, then only we can reduce the value of long-term investment. Otherwise, we are not supposed to make any adjustment in the value of long-term investments. We have to carry the long-term investments always at cost. Now, in this particular question, what we are given, what information we are given? We are given that A Limited invested in shares on 1st December 2021 at a cost of 50,000. Out of these shares, 21,000 shares were purchased with intention to hold for 6 months, and 25,000 shares, rupees 25,000 shares were purchased with intention to hold for long term. It means for 25,000 shares, we have half of the investment we have to take as current investment, and half of the investment we are supposed to take as long-term investments. For long-term investment, no deduction in the value of investment is to be made, no change in the value of investment is to be made, and for current investment, we have to value the investment at cost or market value or fair value, whichever is less. It is basically as the principles for determination of value for the investments at the year end. Now, it is also given to us that this company has also purchased gold of rupees 1 lakh, silver of rupees 30 lakh on 1st April 2021, and market value of the above investment on the year end date is also given to us. Now, for shares, it is given that 47,500 is a value and decline in the value of shares is temporary. It is very clearly mentioned to us. It means 47,500 divided by 2 is the value for current investment. And for the remaining category of investment, which is a long-term investment, we will carry the value of 25,000 only, because 23,750 is the value for current investments. We have to reduce the value of current investment, but for long-term investments, we will have to take the value of 25,000 only. And for gold and silver, generally, if nothing is mentioned in the question, we will presume that they are generally held for longer period of time and they are considered to be long-term investment. No adjustment in the value of those assets will be made in the balance sheet of the company. However, if there is a decline in the value of investment, as we have told you for long-term investment, if there has been a decline in the value of investments, which is permanent in nature, then only for that reduction, we have to make the provision by charging the amount to profit and loss account and reducing the value of the long-term investment. Otherwise, not. Otherwise, no adjustment in the value of long-term investment will be made. So here, for half of the equity shares which were intended for long-term investment purpose, which were purchased for with intention for more than one accounting year, for more than 1 year, they were to be considered as long-term, and their value will remain 25,000 only, for rupees 25,000 only. And for gold and silver also, we will not make any adjustment in the value if they are considered to be long term. But if there has been a reduction in the value, like gold earlier was 1,80,000. Earlier the gold was 1 lakh, and now the value of the gold is increased. We are not supposed to make any adjustment. And silver was earlier 30 lakh, and now it is 30 lakh 55,000. For this also we are not supposed to make any adjustment, because we can only make the adjustment in the value if the decline in the value is there, and that decline, due to the concept of conservatism, we reduce the value of the investment if the decline in the value is permanent in nature. But for hike in the value, for increase in the value, we do not make any adjustment in the value of long-term investments. So long-term investments and current investment, the basic concept of difference is that for current investments, we have to value the investments at the year end at the cost or market value, whichever is less. But for long-term investment, they will always be remain in the books at the cost price. The only thing is that when we will make the provision for depreciation in the value of this, for provision for diminution in the value, you can say, or for reduction in the value of investment, you can say, that amount only will be reduced when that is in the nature of permanent reduction. And there are clear-cut indicators that we should determine that there are clear-cut indications that this value is going to be permanent in nature, maybe for some particular period of time. Otherwise, all the long-term investments are always to be carried in the books at cost price only. What about the reclassification of investment? If there has to be made any reclassification, earlier suppose we were making current investments category of rupees 25,000, but we now want to reclassify these current investment into long-term investments. Then in that case, what will happen? Suppose there has to be a reclassification of investment from current to long term. In that case, the reclassification has to be done at cost or fair value, whichever is less. And when there has been a reclassification, so reclassification can be under two categories, from current to long term and from long term to current. So if the classification is from current to long term, then how will you value the investment? These will be valued at cost or fair value or market value, whichever is less. And if long term to current, then we have to determine the value at cost or carrying value, whichever is less. Carrying value means the book value, and the cost means the cost at which we acquired those investments previously. So in this question, this is a concept which is based for the reclassification of investment as per Accounting Standard 13. Now, in this particular question, you can see that a portion of current investment which was purchased for 20 lakh is to be reclassified as long-term investment as the company has decided to retain them. The intention of the investor may change at certain point of time. Earlier, we might have purchased this investment with intention of not holding them for more than 1 year, but now our intentions might have got changed, and now we want to retain them as long-term investment. In that case, how will you value the investment when you will make the classification? The market value is 25 lakh, and current the value of cost, the cost price at which we purchased these investments were 20 lakh. Now, cost or market value, whichever is less, it means 20 lakh or 25 lakh will be compared, and the reclassification will be made at the cost of rupees 20 lakh. Another portion of current investment purchased for rupees 15 lakh to be reclassified as long-term investment. The market value of these investments as on the date of balance sheet was 6.5 lakh. Again, another portion of current investment which was purchased for 15 lakh. So again, we have the similar permutation and combination, we have this cost and this is a market value. So at what price, at what value you will reclassify these investments from current to long term, they will be classified at rupees 6.5 lakh only. And what about the loss of rupees 8.5 lakh? That loss has to be taken to profit and loss statement. That loss has to be charged to profit and loss statement. However, in the very first case, when we were making the transfer at cost of rupees 20 lakh, then there was no loss because we already had the book value of 20 lakh in our books. But in the second case, why the loss has been there? Because in our books, we were showing the investment at rupees 15 lakh, but now we have to show it at rupees 6.5 lakh, then definitely the 8.5 lakh difference is a loss due to reclassification of the investments. Then in the third category, we have certain long-term investments which were no longer considered for holding purposes. So now our intention has been changed and we want to now show it as current investment. The original cost of these investment was 18 lakh, but they had been written down to rupees 12 lakhs. It means what is the carrying value? In this case, for these particular investment, carrying value is 12 lakh. And the cost is 18. For investments which are reclassified from long-term to current category, the reclassification has to be done at cost of carrying value, whichever is less. So here the carrying value is 12 lakh and cost is 18 lakh. It means the reclassification has to be done at rupees 12 lakh only. So reclassification has to be done at rupees 12 lakh only, and because already we are having the book value of 12 lakh, so there is no point of any profit or loss because already we are showing in our books this investment at rupees 12 lakh only. So one more standard is left where to be discussed, AS16 on borrowing cost. That I think we will continue tomorrow. One small question on AS13 we can take now. This is regarding how to compute the cost of investment. In this case, Mr. Mohan has invested some money in various mutual funds where we have 4 scripts, which for each and every script, the date of purchase has been given to us. And we have to consider the value of investment in our mutual fund as on 31st March 21. So for the very first category, for A category, the investment was purchased for more than 3 years. So that is why it is to be construed as a long-term investment, because the date, you can compare the date, it is 1st May 2017 and we are determining the value on 31st March 2021. So it is more than 3 years. It is to be construed as long-term investment. If it is long-term investment, then whatever cost is there, 50,000 plus 220, 50,000, 220, and market value is this. We are not supposed to consider the value of market and we have to show it at cost only. Now, the question does not mention you that this market value is temporary in nature or this is permanent in nature. The reduction in the value is permanent in nature or not. Now, how will you write the answer for this? Because you have to classify the investment, you have to write the value. You're not sure whether the reduction in the value of this particular investment is temporary or permanent, whether you are supposed to provide for the reduction in the value or not. You can give the assumption in this type of question and you can say that you have assumed that this reduction is permanent. If this reduction is permanent, then the value of 48,225 will be considered. Otherwise, it will be shown at rupees 50,000 only. So both options, both alternative you are required to mention here in this particular question, because the facts of the question do not clearly indicate the nature of reduction in value. We do not want to leave any scope for the evaluator to reduce marks from our answer to deduct any of the marks, and that is why we want to provide every alternative in the answer which is possible. Every alternative should be provided in the answer itself, in the absence of any information, in the absence of any requirement to the question. In B category of the investment, it is clearly, we can see that all the other investment are short-term investment, B, C, and D. And here the cost can be computed as purchase cost plus brokerage plus stamp value, and market value can be compared with the cost in each of the three cases, and then you can determine whichever is less will be the basis for evaluation, will be the basis for valuation of investment. And the intention to hold the investment is very important to be determined in each and every case. So now in this particular question, however, the question asks us to classify the investment in accordance with the provisions of AS 13, and the question requires us to value the investment also. So what we are doing, we are initially we are just showing that what AS 13 states to us, a brief introduction we have to give here, and then we can classify the investment. Without giving this, if we just classify the investment, then we will be deducted the marks for this particular portion, because we should be having the capability to write at least the provision of that particular standard, on the basis of which we are making the classification. So I hope this standard is clear to you. Only one standard, AS 16 on borrowing cost, which is left. We will continue the session tomorrow, and we will take this accounting standard in tomorrow's session. And certain important aspects of the other chapters also we will be covering in tomorrow's session. And we will be taking some peculiar questions on those topics, so that they can resolve your doubts. If you have any doubts, you can ask. We will be clarifying them. In between also, we have taken certain doubts, but still we will be having more doubts. If any more doubts are there, we will be welcoming your queries, and we will be answering those queries.
With this, we might.
Mr. Harish Kumar is asking something like this: study, what are the important points to be highlighted? Treatment of government grant for different purposes. Actually, government grant can be taken. Government grant is basically in the nature of grant. It may be in the form of cash assistance, or it may be in the form of non-monetary grant. So if we are receiving the grant for the purpose of fixed asset, then we have two options, and that was a question which we were taking in the at the time of refund of grant. So if we had already reduced the grant amount from the cost of fixed asset, then at the time of refund of grant, we have to add it back. And if we had not reduced it from the cost of fixed asset and we had taken it as deferred income, then there is no point in adding it back. So that was a point of discussion in this particular question. I think there should not be any confusion in question on AS 12, where the refund of grant was supposed to be taken. And in previous question, we had three situations which were given to us. One is for where we received a subsidy, and we were supposed to set up an industrial undertaking for in a notified backward area. In that it's very clearly mentioned that it was in the nature of promoter's contribution, because it was given with reference to capital outlay. It was given in the nature of promoter's contribution. That is the reason it was to be taken as capital reserve. In the second part, we are receiving some amount of grant on installation of treatment plant. Treatment plant is a capital asset. So for that, again, we have two options, which we discussed and we took in the next question also. And another situation is where we are receiving 25 lakh grant, rupees 25 lakh grant for providing medical facilities to the workmen. For providing medical facilities means it is in the nature of revenue grant. So it will be considered as revenue in nature, and it will be shown either as other income. There are again two alternative options for this. It will be shown either as other income, or it can be shown as a reduction from the relevant expenditure head in our statement of profit and loss account. So either you can treat it as other income, or you can show it as a reduction from expenditure in our statement of profit and loss account. So I hope these accounting standards, 7 accounting standards we have covered. I hope these accounting standards are thorough to you now, and you can study again from the study material, and you can solve the questions again. If you have any doubts, if you have any queries which come fresh in your mind, you can ask in tomorrow's session also. We will be solving all your doubts. It's better you read the contents given in the study material, and at least the accounting standards portion, if you refer again. So this portion, which is very crucial from the examination perspective, at least this portion, it will be clear from your side, and you will be having the complete confidence in this particular section for answering the questions in the examination. So with this note, we will meet you tomorrow, and we will take another important aspects of another significant chapters of the curriculum. Thank you.
Thank you.